Hello everyone, welcome back to Lab4crypto. Bitcoin is at 91k and 10 days ago we were at 65. So that was an amazing move, an exponential move to the upside. But many of you are starting to become worried that this exponential move of Bitcoin happened too fast and therefore Bitcoin could reach a local top. It can cool off for a couple of weeks before we move to our target, which is 180 to 200k by the end of 2025. So in this video, I'll do a risk assessment on Bitcoin based on my view. Of course, we are going to check many graphs that I have prepared for you, because in the end, we want to check if Bitcoin is doing something that it did not did before. So these exponential moves, sudden moves happen before as well, and what happened when Bitcoin did that. So if you like the content, please give us a thumbs up and leave a comment, as that helps us a lot to grow our channel. So first, let's move to our flagship model, which is our price vs risk model. This model is very unique in the market, and I don't know any other models that are combining off-chain and on-chain data together daily to give you a risk value between 0 to 100% to understand when is a good time to exit the market and when is a good time to accumulate. As you might expect, the red line is the risk level and goes from 0 to 100%, and the blue line is the price of Bitcoin. So for example, let's move to the recent data, which, for example, Bitcoin in March, when it reached its first all-time high, in 2024, we had a price level of 71.5. The risk of Bitcoin was 82. And then Bitcoin dropped to 49k in the summer months and also in the beginning of September. So we had values which were approximately 20k below this value. And the algorithm was signaling that Bitcoin was starting to become overheated at the time. Bitcoin reached a local top, as you saw. And then as Bitcoin was moving to lower values, the risk was dropping. And when Bitcoin was at 62k, for example, the risk of Bitcoin was only 22%. So at that point, it was sending us a message that the off-chain and on-chain data of Bitcoin were at a good stage, that someone, if he wanted to accumulate some BTC, the risk, it was in the low region. Because in the end, I made a video which I explained strategies that you can utilize this graph. For example, you can dynamically allocate some of your capital to the low risk regions and starting to exit as we move to higher regions. But what I want to point out here is that this model does not move together with price. So most of the risk models, as the price of an asset goes to lower values, the risk becomes lower. And when the price of an asset goes to higher values, the risk becomes higher. Our model does not do that. And that's why you'll see that, for example, here, price of Bitcoin was 67k. So just 5k below its all-time high, which was at 71k. And it was signaling us that the risk of Bitcoin now it's low. And of course, if someone follow the risk model, now is 30k up, for example. That is, I think, is very novel and important model to watch as we move into the bull run that everybody's expecting. And just to illustrate the importance of having a model that does not only encompasses the price, have a look what happened on the FTX crash. On August 2022, the price of the FTX coin was $29 and the risk was only 2.5%. And a day later, when the price was $30, the risk moved to 72% risk. And that was 3 months before the crash of the FTX exchange. So that means, what I want to say is that with only $1 move of the price action of FTX, the risk algorithm, because also I checked the on-chain data and found things that was off, and it was signaling that something, the risk level was becoming higher and higher. Of course, we didn't know that the FTX was going to be bankrupt 3 months later, but it's a useful tool to see the market from another lens and not only from price, volume, and the standard metrics that most of the models are using. So currently we are at the middle level at 57. Of course, the risk level of Bitcoin is increased. It did not reach levels that I'm going to start worrying that this is the top of the market. But definitely someone can prepare an exit strategy and take some profits off the table to move it to altcoins or USDC or whatever. Without a doubt, 2025 will be, I think, an amazing year for Bitcoin, especially if it becomes a reserve currency. But in the end, we can use the previous data that we have from Bitcoin, and we can follow the same pattern until there's something that changes this pattern. And what I mean, in previous cycles, Bitcoin usually, when we enter the bull run, the actual bull run, we see Bitcoin moving to higher values, but altcoins tend to outperform it. For example, if Bitcoin now moves from 90K to 180K, that means that is a 2x. But some altcoins will do 5, 6, or 10 and more X's, because during this period, altcoins tend to outperform Bitcoin. Of course, you need to pick your altcoins wisely. And what one can do, it can take some profits, for example, from Bitcoin and start to move them to altcoins, so it can take both upside of the altcoins and Bitcoin and exit the market when things starting to become really scary. So we're starting to see valuations that showing us that are unsustainable. And usually that happens when Bitcoin goes above this green line. So when Bitcoin moves above this green line, tends to come back to the red one, which the red one, imagine, is the fair value of Bitcoin, which now this value is at, the fair value of Bitcoin is at 80K. So now we are starting to become a little bit overextended. But believe me, in bull runs, you will see this blue line, which is the actual price of Bitcoin, move above the 2 standard deviation, but then it will correct itself and come back to the fair value. The next model that I wanted to show you is the free float MVRV. This model, let's have a look what it is first. The free float supply basically is the current supply of Bitcoin minus the restricted supply, which is the supply that it did not move for the last 5 years. So imagine we are removing some coins which people have lost their keys, for example, Satoshi coins and many others. And what we do, we basically take this free float market cap and we divided it by the realized cap. The realized cap of an asset of Bitcoin, for Bitcoin as an example, we're using the on-chain data to calculate the price of Bitcoin. And what I mean, if I transfer you now 1 BTC and the price is 90K, that means me and you, we decided that the Bitcoin price at the time that we made the transfer was worth 90K. And even if Bitcoin moves to higher values, for the realized market cap, it calculates the price that we actually move Bitcoin and not the actual one. So the market cap of Bitcoin is always the current price of Bitcoin multiply the circulating supply, but the realized cap is the price of Bitcoin at the time that we move the asset multiply its current supply. And in the end, this graph is showing us that when we move, if we divide these two values and MVRV moves to values above 2, that usually signals that we are approaching a top. For example, in the previous cycle, Let's go a little back. So in the previous cycle, we have moved between 2 and 3 FF MVRV value to starting to show that Bitcoin was reaching its top. And also in previous cycles, we went above this value, but as Bitcoin matures, we are seeing these diminishing returns, and that is reflected as well on the FF MVRV. So for us, when Bitcoin is starting to move above 2 on the FF MVRV, it's a good plan to starting to take some profits off the table and start to prepare your exit strategy. Because in the end, we are allocating capital to any asset because we want to make some profit, we want to make some money for a better future. So I know that it's good to hodl the asset that you believe in, but we have expenses, we have stuff that we need to do, and it's a good approach to also prepare your exit strategy. The current value of the FF MVRV is at 1.8, so we still have room for the 2. And basically, for me, when FF MVRV goes to values above 2 and the risk of Bitcoin goes to values above 60, I will start thinking if I'm going to remove some profits and put it to a stable coin or an altcoin that after I did my research, I believe has a great potential to outperform Bitcoin in the actual altcoin season. Because note, we are not in an altcoin season. We have the altcoin index, which is an easy way to check if we are in an altcoin season. Currently, this index is at 31. And to have an indication that we are in an altcoin season, this value needs to go above the 75 value. So above this lilac line. So the red line, let's go. The red line, which is this one, needs to go above the lilac line to start thinking that we are in an altcoin season and try to do the strategy that I'm planning to do to move some profits and take it to altcoins. Also, Bitcoin is above its FOMO level, and now we are moving for the first time sustainably above it. So we are, and this level is at 63.7. So that also is amazing news. And this graph that I show you, the price power line, one can take the deviation of the blue line, which is the actual price of Bitcoin, from the fair value line to create this graph. This graph, what it's telling us is that when the actual price of Bitcoin overextends a lot from the fair value line, tends to signal that we are in a cycle top and therefore, or a local top, and therefore is a good time for you to exit with some of your profits. So in previous cycles, you will see that we have reached values between 75 to 100% deviation above the fair value line. And all this top, which you can see, I have it color coded. So when we enter this orange to red region, that means that it's a good time for you to prepare your exit strategy. Now we are only 11%, we have only 11% deviation from the fair value. So you can see we are in the green region and we have still a lot room to grow to have an indication that this is a local top. So as I said, we need to combine a lot of models to starting to be sure that it's a good strategy to start moving some of our profits to altcoins, for example, or stable coins. All these models show that we have moved above the fair value, are starting to become overextended, but nothing to show that this is the local top. We need the risk of Bitcoin, for example, to move to values above 80% to starting to feel that things are starting to become off the FF MVRV to go to values above 2. And I wanted to show you this graph because it's good to see that now, basically, BTC, all these lines are showing the ROI of BTC after elections. And we can see the red line showing that we are mimicking 2020. And it's good for us to see if Bitcoin start to become let's say, overextended and bring ROIs that we have not seen before. We only have 3 elections from 2012, 16, and 20 to compare, but it's good for us to monitor. You can see the slope of the line mimics the one which is the green one. So not the blue one, not the orange one. Moving next, if we calculate Bitcoin ROI from the bottom of the previous cycle, moving to the next one, you will see the red line, which is the current cycle, is perfectly aligned with the last 2 ones, which, as I said, Bitcoin at the beginning had these exponential price increases because it was a new asset, the market cap was low, and therefore was easier for someone and for, let's say, people to move its price. But now that is almost 2 trillion, it becomes harder and harder to move. And it's better to compare it with the last 2 cycles, in my opinion. And therefore, you will see the green line and the lilac and the red are really close. So if you see it, actually, Bitcoin is like the average of these 2 lines. So that it's good news. And if we calculate also the ROI of Bitcoin from the peak of the last cycle, so for example, the peak that we had in November in 2021 when Bitcoin reached 69K, for example, you will see November of 2021, correct, to present, you will see, and I have this line to show the date since if we start to counting days from the peak of the previous cycle to today. So you will see that actually Bitcoin, again, does not showing anything special. We are really aligned with, for example, the green line, which is the ROI that we saw from the previous cycle. So again, that is good news. So to sum up, because I don't want to be this video to be very long, we have metrics that show that Bitcoin started to enter the exponential phase. So the exponential phase of Bitcoin is when it deviates from its power law line. So for example, if we see this graph, and I will make it also wide so it'll be easier for you to see, you see Bitcoin have this growth, this power law growth, and during bull runs, there is 1 year that enters this exponential phase. So one is here, the other one is here, and so on. So now you can see that we are at the start of this exponential move. And of course, Bitcoin has the corrections along the way. So that is why I'm not just waiting for Bitcoin to reach my target, but if I see some metrics to signal that we are overextended, I can exit with a bit of my profits and re-enter when I think I'm comfortable. Because in the end, what I'm saying here is not financial advice. It's just I wanted to emphasize that you need to have a risk tolerance. You don't need to have a position you are starting to think uncomfortable with. So when you feel that the market is becoming overextended, use tools like our platform or any other platform to give you a better understanding of the market. Because in the end, for example, we are using thousands of graphs to get a better understanding of the market. For example, if you check the profit and loss of Bitcoin, 100% of the Bitcoin supply is in profit. So usually in these cases, we have some people taking some profits off the table. Of course, we can stay for an extended period of time into the region of 100% profit, but you cannot blame anyone when they want to take some profits off the table to do it. So therefore, you need to have a plan. And if you are happy and you want to exit when Bitcoin, for example, will go to risk levels between 80 to 100% and not just between 50 to 80%, that's fine by me. It's just you need to have a strategy. You need to prepare it now, because as things become crazier and crazier, and this is what happens in bull run, you will lose your mind. You need to have a plan to exit or enter the altcoins or completely exit the market. And that is what we offer basically. We have all these tools, and also for people that are new, We have a detailed video explaining each graph, so you will know what you are seeing. Also, we have detailed description regarding what you are seeing, and also a table with all the data. I hope this video was helpful and it gave you some value. Please do not forget to give us a thumbs up and leave a comment. And until next time, bye-bye.